Hey there, welcome. We're just going to get started putting this on to Facebook. So just give us a moment as we get started and looking forward to connecting with you today about debt free life. All right, so here we are. We're going to be talking about debt free life today. Just waiting on Jordan to get us started. All right, well, it is 4 o'clock, so I'll go ahead and get us started. My name is Betsy Barr, and I'm a debt free life advocate based here in Knoxville, Tennessee. I've been with Symmetry Financial Group for just over a year and really love how just kind of helps protect families' biggest asset, their ability to provide an income for their family. And this is a product that we rolled out just fairly recently in terms of how large and how long the company's been around. And it's just been really exciting to see what it has done for families and what a big difference it's been making. It's been making for families, helping them get out of debt, helping them provide for their retirement. And so I get really excited about sharing this each week. So I'm from Knoxville. I've been living overseas most of my life, but come back home to Knoxville in the past 2 years. And I have two little boys, 6 and 8, and a husband who is a church planner here in Knoxville. And then I kind of get a little nerded out during these presentations because I've also been a math teacher for over a decade. And so what I really love about this is that we get to kind of use numbers to help work for families and help them create financial freedom for the future. So when Jordan gets on, she'll introduce herself. But so just kind of getting started here, the questions we kind of look at with debt-free life, as we're saying, we want to ask you is, are you 100% confident in your current retirement plan? And what if you could eliminate debt in 9 years or less without spending any additional money? And so these are kind of the main things that we're going to address during this seminar. And so hopefully get you to where you are confident about your retirement plan, and then where you can eliminate debt in 9 years or less. So what we do with the Debt Free Life program is that we're going to show you how you can reduce the interest that is paid to lenders. You can erase your debt in 9 years or less, decrease your taxes, improve your cash flow, and start saving money, and then help you retire with tax-favored income. All right, now one thing we really like to share is that this is not some new crazy program that we just kind of thought of and are trying on the fly. This is actually a 200-year-old program that people that have kind of work in the wealthy arena of the world that maybe most of us don't get to walk so much in. But these are strategies that they use to help them create the empires that now are so familiar. For instance, Walt Disney, Doris Christopher with the Pampered Chef, Ray Kroc and McDonald's. I actually fed my kids McDonald's today. And J.C. Penney. Also, the Rockefeller family, this is something that they've used to help create generations of wealth for their family. So this is something that that people that are very financially savvy have been using for a long time. And so what we're doing now is just kind of taking that and making it available just, to your average American family. This is something that my family uses, and it's just really made a really positive difference for us. So we'll kind of just start off talking about some knowledge, make sure we're all on the same playing field here. So we talk about life. We all go through life. We've got a little journey going on. It's different for everybody. Maybe you go to college, get some student loans, then you get in a little bit of debt. And then you get your first job, maybe you get a car and have a car loan. Then, have a house, have some kids, you got a mortgage, you got to pay for stuff with the kids. And so a lot of times it can seem like financially we take 2 steps forward and 1 step back. And then by the time that we reach retirement, people are sometimes still in debt, and so not able to have that retirement that they envision. And that just is kind of what we see for a lot of people that we talk to. Thinking about the U.S. right now, we do have a lot of debt as a country. Looking here, seeing that our total debt as a country is $13.6 trillion, and of course that's only rising, especially with just the realities of the pandemic right now, and what the government is doing to help out Americans through this time. And so we can just expect to see that number rise even more. But as we look at the average American household, what we've seen is that the average household debt is about $250,000. And then the way that money is spent in the average home is, if you have $1, about 3% or 3 cents out of every dollar goes towards savings. Now, a lot of people will say, well, hey, just save more. That'll help you get ready for your retirement. That'll help you get out of debt faster. Well, the reality is most of us are saving as much as we can. I know for myself, we try and, say, hey, we're going to put half of what we spend, half of what we make into savings. But we've got other things that we need to pay for. We got to pay our utilities, got to pay for the car, got to pay for insurance for our family, for health insurance, and kids got to eat. They like to eat a lot. And so for a lot of us, 3%, that's the most we can do. And we're doing good to hit that 3 cents out of every dollar going towards savings. And then if you've got different types of loans, 34% on average of every dollar is going towards the interest on those loans. 40% is going towards taxes, property tax, gas tax, income tax, sales tax, all kinds of different taxes. So that's almost 3/4 of every dollar is just going towards interest and taxes. All right, and so we're welcoming Jordan in here. Hey, Jordan, glad to have you.
Sorry
Hey,
about
no problem. I just went on ahead, and so we're just talking here about the average household. And so once you kind of look at savings, your interest, your taxes, that only leaves about 23% going for lifestyle. So that's kind of where the average American family is right now. And so, Jordan, why don't you tell them what is it that we're able to do when we use debt-free life, kind of shift those numbers over a little bit?
Yeah, for sure. And guys, again, I am Jordan Gillum. Sorry, I was having some technical difficulties, which is just going to happen when we're only using technology to take care of things. I have been a part of Symmetry Financial Group for about 3.5 years now, and I'm absolutely thrilled that you passed this on to me at this point, and I'm happy I got here at this point, because with Debt-Free Life, we are taking that average household debt, in the way that it's normally dispersed amongst interest payments, taxes, savings, and lifestyle. Debt-Free Life is having more money being given to the family to have, to save, to live with rather than going to lenders and taxes. So we're able to help with decreasing taxes, lowering the amount that is going towards interest payments, increasing savings, as well as increasing more for your loan lifestyle. So more of a balance rather than 74 cents out of every dollar not even being seen because it's going to lenders and taxes. You're looking at having at least half of your money to your own self in the way that you need to use it. So yeah, so that is what we're seeing with Debt Free Life, as well as including just removing debt for the average household. So what we also like to show people, and this is not our most favorite slide to go to, is this is the average American household. In your lifetime, the average American touches $2 million. It goes in and out of your hands some way or another. You're touching $2 million. But your total assets at age 65, the average American has $60,000 to their name as far as assets. Now, 2 million, and when you actually want to retire and you don't have debts, and hopefully you don't have debts at 65, and you're wanting to kick back and enjoy life, $60,000, not for me at least, doesn't fit what I see as far as how I want to retire. Betsy, how do you see yourself retiring? Like when you envision your retirement, how do you visualize it?
I've got 2 boys, and so I imagine that I'll have some grandkids, and I want to spoil them. And I want to, be able to take them on trips and be able to, lavish them with, be that traditional grandma that just gives them everything their parents maybe don't want me to give them.
Right.
And we want to be able to give back to our community and be generous with others. And so, just the reality is $60,000, that might not even take us through 1 year.
A year. I was about to say 1 year. Yeah.
And so, yeah, I would be concerned if on track I see that I've only got 60,000 when it's time for me to retire.
Yeah, actually, what we find is most families by age 65 are relying on friends, family, charity, and Social Security by the age of 65. So, who do you guys know is falling into that statistic as it is? A lot of the times, the reason why people fall into that statistic, and there's so many people who are relying on friends, family, charity, and Social Security by age 65, is because of debt. It's because they didn't get to take the money, like we were talking about earlier, and put it towards their future. They were too busy putting it towards taxes and lenders and interest payments. So we ask everyone, when we're showing this product, does $60,000 at 65 fit how you envision retirement? And so for most families, 60 grand ain't going to cut it. Maybe for a year, maybe for a couple of years, if you're being, sparse with the way that you fund yourself and how you want to retire. But yeah, so that's where our passion comes from. Our passion with this program is geared towards helping more people not fall into that statistic right there. Well, let's keep going. Oh yeah. This is one of my most favorite things to discuss, because of the fact that when we're talking about how banks leverage cash flow, it'll help you understand the concept of debt-free life and how families are so excited to be able to take what's happening to them and make it happen for them. So how do banks leverage cash flow? We're on the knowledge section, right?
Yes, that's right.
Okay, good. That's what I was making sure. So yeah, so we're still delivering some knowledge here. So with how banks leverage cash flow. So you go to a bank, right? You've got, let's call it $1,000. You got some kind of, that's right, the stimulus check. If you get your stimulus check and you're like, I'm going to put this in a savings account because I want this to be here in a couple of months, right? So you go to the bank and you found an account and they said, ooh, we got the perfect savings account for you. This savings account is going to give you 1% for your money. And you're like, whoa, I have never heard of a savings account that's going to give me 1%. So yeah, so you're happy, right? A couple months later, something happens, let's call it a pandemic, right? And you're like, hey, I'm going to need to take a loan out, because you don't really want to take all that money. You kind of want it to still be there, right? But taking a loan, you'll only have to make payments back on it. So you go to the bank and you say, hey, I'd like to take a loan out for, let's call it 10 grand, right? I just need some money to go do whatever it is that you need. Just need it for a little while. They're going to say, okay. They check your credit score and they say, your interest rate is 7%. And then you have a loan, you have cash, thankfully, you've got 10 grand in cash, but you also have to pay back a 7% interest rate on top of that. And so I don't know if you all know this, but a dollar, when you give a bank a dollar, they're going to lend it out 7 times at many various interest rates. It could be a home loan. Your dollar could be given to a home loan. Your dollar could be an auto loan. The dollars that you put in the bank are for them to lend out. That's how they're able to make money. That's how they're able to pay the people who work there. And that's basically how the bank takes your money and gives it back to you, when in reality, you're paying a whole lot more for your own money. So wouldn't it be nice to be the bank for once, right? So I think this is a good moment for us to discuss one of our other favorite topics.
Yes. Okay. So this is compound interest. So I love this quote from Albert Einstein. It says, compound interest is the 8th wonder of the world. He who understands it earns it, and he who doesn't pays it. So this is why we put it in the knowledge section, because we want you to understand it so that you can earn compound interest and you don't have to pay compound interest. So I mentioned that I've been a math teacher for over a decade, and I always teach interest to my algebra students. All right, and there's all kinds of different interests. There's simple interest, compound interest, continuously compounded interest. But today we're going to talk about compound interest. And so here's a little example that just kind of gets people thinking and kind of illustrates the real power of compound interest. So let's say that you're asked a question, hey, would you rather have $1 million today or a penny doubled for 30 days? Okay, so Jordan, what do you think most people answer?
Today, a lot of people are going to take that $1 million right now.
100%. And without fail, about 90 to 95% of my students were always like, give me $1 million, let's go. So then we kind of started working it out and seeing, hey, what does it actually look like if you get a penny doubled every day for 30 days? So for the first 10 days, you're still kind of in the cents. By day 10, you're up to like $10 a day. All right, so that $1 million is looking pretty sweet. But then after 10 more days, that power of compound interest, it keeps doubling over and over and over again. So by day 20, now you're earning $10,000 per day. So again, that $1 million is still looking better than $10,000 a day. But now let's see what happens those last 10 days. Boom, it kind of gets crazy. By day 27, that one day you're earning over $1 million. And by day 30, you've got $10 million in just that one day. And so it starts off small, but because it's this exponential type of growth, you're getting so much more because of compound interest. And so that's really where a lot of the power of this Debt-Free Life program comes into play. It's because we're able to use compound interest for you to be earning it instead of paying it. All right, sorry, that's my nerdiness a little bit over for now.
Now, let's talk, right? We have, sorry, my internet's a little goofy, so we were talking over each other for a second. Sorry. This is actually my most favorite subject because this is what it's all about. We're going to be talking about minimizing debt to create additional wealth. Wouldn't it be great if you could pay off all of your debts in 9 years or less, including your mortgage? Like, if you could, what would that mean for your retirement? What would that mean for your future? Most of the reasons why people can't retire until 65 is because they're attached to a 30-year loan at the age of 30. So what if we could? So let's take a look at debt for a second. This is our typical American family, Mark and Joyce, and we're going to take a look at their current financial analysis. We normally do this with most of our families, especially if they're looking into debt-free life. We'll sit with them and we'll discuss, where are you, and do you have a current plan to get where you're wanting to go? So this is Mark and Joyce. They're a traditional mid-late 30s family. They're bringing in about $7,000 a month. They want to retire at 65. They would like to retire with $5,000 a month, which we all know is about $60,000 a year. There's that $60,000 at the age of 65, but hopefully they have it every year. Do they have a plan to reach that? Not yet. They don't have a plan, and that's okay. That's why they came and checked out Debt Free Life. They currently have a retirement account that has less than $1,000 in it, or excuse me, less than $100,000. And they also have 3 children. They have 3 children at the age of 3, 4, and 8, and they currently do not have their college savings saved up at all. And that's okay. I mean, you got to start somewhere. So we asked their concerns. Their concerns was eliminating their debt, controlling their spending, getting a good idea of where the money's going, saving for retirement, providing for their children and grandchildren's education, and maximizing on their savings, as well as establishing a will and trust. As you'll see on the next slide here, you'll be able to see their savings, I believe, in their retirement. Yeah, so you've got your savings and your investments. This is how they're currently putting their money to the side to prepare for either emergencies or they're preparing for their future. And they have $6,000 currently in an emergency fund. They've got 36 grand in some kind of 401k, and they're contributing monthly to make sure that they're putting that to the side. Like we were talking about, normally a lot of people's savings is just about this much of the huge pie chart. And that's just because that's all we can do at this point. So this is where they're at. You also see their debt. Their current debt is pretty standard. You'll see that they have 2 credit cards, some dental debt. They've got furniture loan, an auto loan, and a mortgage. So when we ask Mark and Joyce, we ask all of our families, what is your debt? Mark and Joyce said, I have $180,000 in debt. We pay about $21.77 a month on all of our debts to lenders, and we have an average interest rate. Some are higher. Actually, I hate to say this, but most are higher. Some are lower. But the average interest rate is 10% on these loans. Yeah. So when we look at their debt, right, we look at the debt that they say that they have versus the debt that they actually have. And with that, you'll see with the interest rate, which is super unfortunate, and this is for a lot of families' cases, they get really shocked when we point this out, but it is very important when planning for your future to see where your money's going. Mm-hmm. And because of compound interest within most of their loans that they have, they're going to be actually spending $199,959 more than the $180 just in interest payments over the next 30 years. Mm-hmm. So their debt's not $100,000. Their debt is basically, if I can do some math here, almost $400,000 over 30 years. So we ask them, what if you could use a debt, what if we could eliminate that debt in 9 years or less? What would that do for you as a family? And I believe, because I know we've made some slight adjustments to the way we're doing things, because we want to make sure this is very, very quick for you guys, yet still as informative as it can be. So here's their current retirement plan. Their current retirement right now is the $36,000 with $300 a month in contributions. Right now, let's say that they keep an annual interest rate of 5% and they stay at a 25% income tax bracket. At the end of 30 years, which is when they want to retire at 65, they would have $408,000 before taxes, but then that 25% tax bracket comes in. Takes away 25%. Now they're retiring with $300 grand. Now, if you're trying to live on $60,000 a year, that $5,000 a month income that they would like, you're only getting through 5 years that way. So this is the kind of things that we want to show families is like, here's what you're currently doing. That's saying that the market doesn't do anything because their money's in a 401k. It's versatile in the market. What if there were guarantees? What if you knew where you were going, when you were going to get there, and what kind of pit stops you'd be making along the way of paying off this debt, paying off that debt? How good would it be to know when you would be debt free, know when you're going to retire, and know when you're going to have the funds to do so? Mm-hmm. So let's check it out. So the results of using the Debt Free Life program Mark and Joyce were able to actually, instead of 9 years, we showed them how to pay off their debt in 7.8 years. We were also able to save them. Remember, they were going to pay $199,000 in additional interest on top of the 180 they owed. Debt-Free Life was able to save them $122,000 in interest. It increased their retirement savings, guys, by $2,177 a month. Because when you're debt-free, you don't pay to lenders anymore. That income is freed up just to go to your future. So when you've got 22.2 extra years to put $2,100 a month into your bank account, that saves this family $1 million in 30 years. Now, that's a pretty sweet retirement.
That is pretty sweet.
And that's savings, guys. That's money that's already been taxed for their future. Not government. Uncle Sam ain't gonna come in and take 25% off of that because he's already taken his 25%. That's just for the family. So when we ask about an opportunity cost, we say, so, if you didn't do this versus you chose your current path, what would that cost this family? That would cost this family $820,458. So what do you think that they decided to do? We get super pumped up about Debt-Free Life because it is changing the futures of the families that take advantage of it. Do you want to share some stories about some families who have?
Yes. Yeah. So here, just some benefits. I mean, just other than, of course, the very explicit financial, this family was in a fairly decent position compared to most Americans, but just by using the Debt-Free Life program, and they didn't spend any additional money on this, by the way, they were able to increase the amount that kind of just stayed in their family in their pockets by $820,000. That's some good math right there. And so just some benefits, you've got peace of mind. We helped them discover that unused money that we're able to kind of go towards that. Then it maximized their cash flow. I mean, dramatically, that's a big word to use, but I mean, it dramatically increased their savings. We got them out of debt in less than 9 years. They prioritized their accounts. And just like Jordan was saying, this was all tax favored income because it had been taxed on the front. So they had already taken care of that. So now you might be thinking, all right, how does this actually work? How could I actually do it? What is Debt-Free Life? So for example, here, when we talk about, all right, yeah, we're not saying spend any additional money. That seems almost too good to be true, right?
Right.
So I promise this is nothing sketchy, nothing weird. What we just do is we go through a budget with families and kind of see, hey, where are those dollars that aren't being used in the most efficient ways? And so, again, this is always something that is up to families at the end of the day because this is your program. This is not ours. We're just here to kind of help facilitate that and support you as you make the financial decisions that are best for you and your family. But so as we went through with Mark and Joyce, in their particular case, we found $625 that weren't being used in the most efficient way. And so that's what their Debt-Free Life program looked like. I work with some families where that's $100, some families where that's $800. It just depends on the family. Some people don't have anything extra in their budget, but they've got a lump sum tucked away, and so we can use that. It's super flexible, the way that we get to use this, and so that's why we kind of meet with families one-on-one, and then kind of see, hey, what's going to work best for your situation. And so now how does this work? Let me explain using this example. All right. So let's say you want to buy a car. Okay, and you've got $20,000. I'm sorry if you hear kids playing. The cousins are together, and so there's much joy in our household. So let's say you want to buy a car, and you got $20,000. So option A is your straightforward, simple option. You take $20,000, you pay it down, you drive away in the car. All right, that's very straightforward. We all understand that. What we do with Debt-Free Life, though, is we take that same idea and we just kind of adjust it a little bit. So it's not quite as straightforward, but at the end of the day, it puts a whole lot more money in your pocket. All right, so bear with me. So let's say you take the $20,000 and instead of just paying down cash for the car, you take that $20,000 and you put it into a bank. And so this particular bank, the green bank right here, it's going to give you a CD for 4%. So you're going to be earning that compound interest. Remember we talked about the power of compound interest? You're going to be earning 4%. But now you still need that car. So now what you do is you go and you take a loan out from the bank for $20,000 to buy your car. And your loan is at 5% interest. So why does that work? So let's check out the numbers here. All right, so here's what's happening in your CD over a 5-year period. Since it's compound interest, whatever interest you earn 1 year, the next year you're earning interest on the initial $20,000 and the interest that you've already earned. So that amount just keeps increasing over and over. So by the time you get down to 5 years, you still got that $20,000 in principal, but now you've also added $433.06. Okay. All right. But now you're saying, well, hey, Betsy, you still had to pay interest. And so let's check out that. Now remember, over a 5-year period, you're going to be paying down the loan. So with that, each year, when we look over a total of 5 years, the interest that you're paying is $2,645.52. So when we compare these two, you see that the interest that you earn is actually more than the interest that you've paid. And so, in fact, you actually earn $1,687.54. So what does that mean? Option A, all right, you pay down $20,000, you drove away in the car. You have a car, you do not have $20,000 anymore. With option B, you, at the end of the day, so this part is a little bit more complicated, but at the end of the day, you still have $20,000, you still have your car, and you've earned yourself about $1,600. And so that's the reason that we encourage people to consider this, is because, yeah, it's not quite as straightforward, but you get to keep a whole lot more money. That just is money that stays for your family, and then you have more choices about how you can make that. And so that's essentially what the Debt-Free Life program is. It's actually, now it's not a bank per se. What we actually for the bank, we use a whole life insurance policy, and that becomes your bank that you use to help pay off your debt. So for instance, let's say you had $5,000 in debt and you wanted to pay that off. So option A is if you have $5,000, you just pay it down, then you've zeroed it out, and now you don't have $5,000, but you also don't have debt. Okay, good. That's straightforward. That's pretty simple. But if we kind of manipulate it a little bit, all right, then what we do with that DFL bank, and so the reason we said a 4% interest CD is because when you put that money in, you're going to be earning a guaranteed interest on that. So that's pretty sweet. Then you pull money out of that to pay off the loan. And then as you pay yourself back, you're earning that more and more and more at interest. So after a period of time, you still have $5,000, you have zero debt, and you've increased your cash flow because of compound interest. So that's in a nutshell what the Debt-Free Life program is. And so it's something that, we like to talk with people about a little bit more to make sure they really understand it. So if you're like, wait, I kind of get it, but not 100%, that's totally fine. We love to talk about it more and make sure that you're 100% on board with it. But just real quick, this is how we kind of leverage some of these financial tools for your benefit. We redirect those inefficiently used dollars into your Debt-Free Life bank. Remember, that's not an actual bank, it's just that policy. And then when it's in that policy, it's growing with guarantees. You can't lose any money once you put it in there. And then you can borrow from it with no penalties. There's no taxes associated with that because it's your policy. We don't have any control over it because it's yours. You can use it to pay off your debts. Then you can repay those loans back to your debt-free life with that freed up cash flow, and that just increases the cash value. I mean, it's that compound interest. It is so powerful. And then what our family uses it for, and what a lot of businesses or churches use it for, is to finance future purchases. You don't have to go to a bank to get a loan. You just go to your policy and pull out a loan. And then since it is a whole life policy, then when you pass away, you get to leave all of that tax free for your family. So kind of as we finish off here, this just kind of puts it in your hands, and just to see, hey, is this something that you would like to consider? It's no cost, no commitment, just to see, hey, what would it look like if my family considered debt-free life? And we would show you what that would look like, and then you can decide whether that's a good fit for you and your family. But just for instance, here's some other examples of people that have used debt-free life and had a lot of success with it. So it's not just one family, but there is quite a lot of families that have been using it. And, I could tell you story after story of family that is just families that are just seeing a lot of life change for this. But we're trying to keep our time short, so I'll keep my mouth closed. But let's see, Jordan, you want to kind of give them just some numerical stats here for our sales history?
Yeah, no, and we're not bragging on sales history, if that makes any sense. What these numbers represent are families taking control of their future. So what you're seeing here when we're talking about sales history, it's what has debt-free life done for families, or what have families done for themselves by utilizing this whole life program that has the guarantees to help them get out of debt. So what we have seen just in the last 3 years with Debt-Free Life, as far as with Symmetry Financial Group and what this has done for clients, there is $171 million plus saved in just interest alone for clients. That's crazy. Because if that money is saved, where's it going? Who actually gets it?
Back in their pocket.
Back in their pockets. You know how many people would love that? All of us, especially if we have mortgage loans. So you've got 171 million in interest saved for clients. Check out, we got more numbers. Hold on just a second. 1.4 billion, that's billion with a B, plus dollars projected for an increase in retirements. When we were talking earlier about Mark and Joyce, we didn't ask them like, hey, throw all your money away from your IRA and put it into something like this. No, their IRA is still going to do their thing. They're just also choosing to pay off their debts early with Debt-Free Life, freeing up that $21.77 a month and increasing their retirement by $1 million. Yep. So Debt-Free Life is increasing $1.4 billion in increase. This number is very small. This is a very small piece of the pie of what this program is going to be able to do for families when they utilize it. Right. So this has just been absolutely, I love it.
It's so exciting. I love it.
So basically, a lot of families say, so what's next? Like, what do we do? How do we get to talk to you guys? So what we do is we keep things very simple. We also like to make sure that we're adhering to your schedule. So we have a Calendly link right there. It says calendly.com/debtfreeknox. On that calendar link is 30-minute time frames, and we also offer up 3 options with our calendar. One asking for a debt-free life analysis. The second one is just for one-on-one questions with us, just to make sure that you understand, okay, so you said that this is whole life, but what about the whole compound interest? We can clarify all of this stuff with you one-on-one in this calendar, and you get to pick the time that suits well for you and your family. Obviously, we would prefer for you and your spouse, if you have a spouse or whoever it is that you are currently in debt with. And so we can help you guys as far as making a game plan that's mutually agreed upon. As well as the third option is providing feedback on how is this coming across to you guys? Are you understanding what we're explaining? Do you feel like we're making our utmost impact doing things the way that we're doing? How can we improve, or just even some positive feedback if you have it? We're always open for that. Just go to that Calendly link and just let us know. Our final announcement is the fact that we have changed time, because what's going on in the world today is the fact that everyone's thankfully starting to go back to work. So we want to make sure we do not miss you just because of the fact that you guys are making money for your family. So we have moved our time of when we're going to be doing this. It's still going to be a short 30-minute segment. You don't have to wipe out your whole evening to hang out with us, even though we'd love to. But Thursdays at 6 p.m. Eastern Standard Time. Betsy and I have actually been working on some short promo videos that is going to keep this message consistent as far as Thursday at 6, just so that in case for some reason you forget, just check Facebook, like, share our Debt Free Knox page on Facebook, and just get the word out about what we're here to do. You can check out our website at debtfreeknox.com, register for upcoming events, or just share this info with people that you know need help. They need direction, and we're more than happy to help them out. But thank you so much for joining us today. Thank you so much for giving us your attention and sharing with us sharing this product with you. This has been so much fun. We love doing this. And Betsy, do you have anything else before we set off?
I think you did a great job. Thank you guys, and we look forward to seeing you again next week.
See you Thursday at 6. Bye.